Howdy, Jacob here. Today we're looking at Allegro MicroSystems, ticker symbol ALGM. It is in the semiconductor and semiconductor equipment industry. Been around since 1990, headquartered in New Hampshire. Looks like they design, develop, manufacture, and market sensor integrated circuits and application-specific analog power ICs. Okay, $6.1 billion market cap on essentially the same enterprise value. Growth is kind of there, 724 million in 2019 up to 974 million. 2 years of decline with COVID, and then two humongous power growths in the last 2 years. Margins all look very healthy, 56% gross margin up from 44%, and then 20% operating margin up from 14%. Return on invested capital the last 2 years has been pretty high, but before that, not so much. So it could be a somewhat cyclicalness, or it's just in the depth of a new start, I guess. Let's look at the balance sheet here. Again, a very healthy balance sheet, 214 in all of their liabilities, and they have 352 million cash and cash equivalents. So if this company keeps making money, it's not going anywhere. They just recently, well, I guess the last 3 years, introduced a heavy stock-based compensation program, which is bumping up their free cash flow a bit, but their their shares are just going to be increasing a little bit. We'll put that into our estimation. Otherwise, their use of money is they paid a one-time dividend in 2021 that was pretty substantial. Otherwise, a little bit to acquisitions. And then looks like there's some other investments here. So companies, I'm going to say this a lot in a lot of my videos with this screener that we're looking at of 15+% ROIC, return on equity and return on assets. These companies should be reinvesting into themselves. With such a great return that they get from investments, they need to be, the worst thing you could see is them just handing out the money to you through a dividend or making acquisitions that are not benefiting their margins or positive growth, because obviously you're going to get growth from acquisitions likely, but it's just whether it's actually creating value for you or not. I mean, the best acquisition I can think of is Google buying YouTube. I think it was like 2 months ago I did a calculation, and whatever they buy it for probably seemed extremely expensive at the time, but since then it's CAGR'd over 20%, just because Google was so good at monetizing. They're amazing at monetizing advertising businesses, but same with this. If you get a 20+% return on investment, you want them to be making acquisitions that largely increase those investments, and then also reinvesting back into yourself into items that can give you that 20+% return that really you can't really find by, you can rarely find by buying back shares, and you can definitely not find if you're just giving back to shareholders through dividend. So I think I'm ready to start making some assumptions here. I think it's probably more cyclical than some of the others, so I might do, let's see, this is short term, but 974 over 724, 1 over, how many years is that? 4 years. Okay, 8% CAGR. So, I mean, they've been around since the 90s. They're $6 billion market cap. Obviously, we have semiconductors much larger, but the space for this integrated circuit might be a bit less. So maybe I'll do 6% margins, probably a little bit lower than what they are right now, just because they seem to be at a peak, it looks like. So maybe a 14, 12, maybe 1% increase of shares per year. Terminal PE with 6% growth at the end of 7 years, maybe, well, still a high potential for ROIC. A 17 discount rate. I don't see a reason, although we don't have a lot of data, I don't see a reason to extend beyond the 15% because they consistently made money for all of the reporting years that I'm seeing, and then they also have an extremely healthy balance sheet. But that gets us to a price that needs to fall 80% before we get the return that we're looking for. Again, with every one of these companies, they're going to be great companies. I definitely want to add them to a list of possible stocks to invest in, but everything is the present value of earnings and cash flow, and to me, it's just not there for it. It's not there for me yet. So, thank you, and have a great rest of your day.